Okay, we can start beginning with the accounting system and double entry. I first of all welcome you to this lecture. My name's CPA Innocent Mugisha, and we'll be taking you through this course together with another colleague of mine. Shall be sharing the lectures on the unit. So we begin with the accounting system and double entry, and here we basically cover the accounting cycle, source documents, books of prime entry, ledgers, accounts, double entry, journal entries. So that is our overview. The notes and the slides that I use here, you'll be able to get them from the student account together with the PDF document. Together with the PDF document. So we shall begin with the accounting cycle. And here we have the accounting cycle, which has five major phases. We have phase 1, phase 2, phase 3, phase 4, phase 5. According to the framework that is on your screen, in phase number 1, we do the recording, and the recording is done in source documents, which include the quotation, purchase order, sales order, goods received note, goods dispatch note, invoice, credit note, debit note, remittance advice, statement, receipt, voucher. So those are the source documents in phase number 1. This one here in phase number 1. Then we have phase number 2 right there, where we do the analysis. And the analysis is done in books of prime entry, which include the sales day book, purchases day book, sales returns day book, purchases returns day book, cash book, petty cash book, and the journal. So those are the books of prime entry, where we do the analysis of transactions recorded in phase number 1. Then we have phase number 3, which is the classification, where we classify our transactions, and the classification is done in ledgers and accounts, including the assets, liabilities, equity, income, and expenses. So that is the point at which we now say that's the point where we say we now have assets, we have liabilities, equity, income, and expenses. Then we have phase number 4, where we do the summarizing, and we summarize in financial statements. The financial statements are prepared beginning with the trial balance, income statement. Then we prepare the balance sheet, the cash flow statement, statement of changes in equity, and the notes. And then finally, we have phase number 5, where we do the interpretation. Now, because of the fact that the people who usually use these financial statements are not accountants in nature, we need to interpret for them the figures that are in financial statements. So we assess whether the company is profitable by talking about the profitability. And we are asking ourselves, when you look at those figures in the financial statements, is the company profitable? Then we talk about long-term solvency, short-term solvency and liquidity. We talk about efficiency, investment viability, and feasibility. So all these interpretations must be done when we complete the preparation of financial statements. So as an exam focus point, we expect you to understand this and be able to explain the accounting cycle as part of the exam type question. So going into the specifics, looking at phase number 1, where we have the recording. And here we are saying that we are going to record in source documents. The source documents as described are listed here, including a quotation, purchase order, sales order, goods received note, and so on. So beginning with the quotation, this is a document that we send to our customer stating the price at which we are going to offer a service or to sell the products. Yes, it is almost the same as the price quote, like a catalog, because we know that a company may have a catalog of prices. Like when you enter the supermarket, you see that each product has its own price. Yes, that one we know, but there are cases where the order is of a specialized nature and we need to make a quotation. And then again, for those in the service industry, because we are not selling goods, in most cases, someone will ask you to provide a quotation showing how much you're going to charge them. Then we have the purchase order. When your quotation is competitive and good, you're going to receive a purchase order from your customer. When the purchase order is received, you need to celebrate because it means that your customer has accepted your quotation and is willing to work with you. The purchase orders are usually sequentially numbered because they are from one source. Then we have the sales order. After you have received the purchase order from your customer, you respond with a sales order, telling your customer that, yes, I will be able to supply you the goods and services you indicated on the local purchase order. At this point, you're going to inform your customer whether you are in position to give them the right specifications. Because there are cases where, for instance, if you're going to supply computers, someone may say, I want the 2023 version, but yet you have 2020 version. So at this point in the sales order, you tell your customer that whereas you asked for 2023, we shall give you 2020 what? We shall give you 2022 because 2022 and 2023 are the same versions. So that one is for you to note that at times the specifications may not be met, but you have what may work as what has been requested for. Then we have the goods received note, which is a document of the company. That this is now at the place of your customer. Your customer lists the goods that have been received from you, the supplier. But before the goods leave the gate, there is a goods dispatch note, which is completed by the dispatch team, the people that are delivering the goods to your customer. These days, you have a company called Glovo. I think Glovo is really occupying this space a lot. Glovo, we have DHL. We have different companies that do dispatch, but you may find that the company has its own dispatch team. So the goods dispatch note must be filled in before the goods leave the premises so that we are able to know that the 10 computers we sent our customer were actually received. If one computer is missing, then we need to know how many computers were dispatched. Is the problem with the dispatch? Was the problem ours? Where could the problem be? Then we have the invoice, which is the demand note, which you send your customer when the goods are delivered. And it comes in 4 copies, as you'll see on slide number 16. Slide number 17, you'll find the details that are expected on the invoice. And don't take this one lightly because it is examinable. You must show the name and address of the seller, purchaser, date of the sale, description of the goods sold, quantity, units, discounts, and all that. Then the credit note will also be sent to the supplier if the goods were maybe faulty, they were damaged, they were excess, not the right specifications. So you have to send your customer a credit note, which is a negative invoice, reducing on the amount that the customer will be able to pay. Then we have the debit note, which is a formal request for the credit note. Remittance advice, which is a list of what has been paid for by your customer. Statement, you can have a bank statement, you can have a supplier statement, and so on. Then a receipt, we have a receipt, which is acknowledgement of payment, acknowledgement of payment. Then payment voucher, which is proof that a transaction, a payment has been made. So basically, that is phase number 1, which deals in the recording and recording source documents. Next, we have phase number 2, which where we handle the analysis. And as I've mentioned, the analysis is done in books of prime entry. Analysis is done in books of prime entry, which include the sales day book, the purchases day book, the sales returns day book, the purchases returns day book. We have the journal, we have the cash book, and the petty cash book. So basically, these are our books of prime entry in which we do the analysis. Now, what is the role of these documents here? Beginning with the sales day book. The sales day book is a record of all credit sales. If you have sold on credit and you have issued an invoice, you record all the invoices in the sales day book. Then the purchases day book. Okay, before we go to the purchases day book, on the screen is the format of the sales day book, showing the date of the transaction, showing the invoice, the customer, and the total you have invoiced. Also, you have to show the title and the name of the book. If you want to fully analyze it, you can still analyze where you split the transactions into their constituent elements, like that 250. Someone will know that, yes, the 250, 75,000 goes for boot sales, 175 is for shoe sales, and so on. So as you can see, you must show the date of the transaction, the invoice, the customer, the total. Then we have the purchases day book, which keeps the invoices you have received from your suppliers, especially if you have purchased on credit. Purchasing on credit means that you get the goods and then you pay later. Purchases day book, like the sales day book, the purchases day book analyzes the invoices which have been sent. So on the screen, we have the format of the purchases day book, showing the name of the company, the name of the book, the date of the transaction, the supplier name, the total amount invoiced, and the split of the total amount invoiced, and the split of the total amount invoiced. However, unlike the case of the sales day book, the purchases day book does not have a column for invoice number. Reason being that the invoices are not coming from one source. They are coming from different sources. Different suppliers have different invoice numbers. Some may have started with 1, others started with the 0010, others started with the 259, something like that. So it will be confusing, including the invoice numbers here. Again, you can analyze it further if you want. Then we have the sales returns day book, in which we record the returns. Those are the credit notes, if goods are being returned by your customer. Then we have the purchases returns day book, in which we record the returns you've made to your suppliers, basically showing the debit notes or the credit notes that you have received from your suppliers. Then we have the cash book, where you record the receipts. Okay, that is if you have paid cash and it's not something that you're going to demand and all that. So you're going to use the cash book. So with those three documents, we can work out an activity to support that discussion. So I'm going to share, first of all, the copy of the notes. Since it's the first time, some of you may not have visited you may not have had time to visit the student account, but you have to get time and visit the student account to get these slides and the notes. So for today, I'll share the notes. And on the screen, we have our first activity that we are going to share. All of us shall read through. Then we shall be stating where the transactions are expected to be recorded. Okay, so let me begin by sharing the slide, accounting system and double entry, and then I share the assignment. This is my assignment number 1, sales day book, purchases day book, cash book, and the copy of the notes. But the last time I'm sharing the copy of the notes because the notes have been uploaded on your student account and should comfortably download the notes. Okay, I think we are good to go. We must be good to go. Okay, on the screen, we have our question that we are going to use to support the discussion for today. And each one of you is going to have a chance of telling us what to do. But in all cases, I want you to tell me whether you're recording in the sales day book, or you're recording in the purchases day book, or you're recording in the cash book. Okay. Yes. So what we shall do, we shall split our answers into 3. You either give me, I'll say A is the sales day book. A is the sales day book. Then B is the purchases day book. Then C is the cash book. So for each transaction, you either tell me the answer is A, B, or C. So I'm going to begin with Aline. Aline, you're going to unmute yourself, read the first parts of the question, and then we start our discussion. Aline, I hope that's your name. Aline, are you there? Unmute yourself. You're going to read this first part, and then read May 1st. Tell us whether the answer is A, B, or C. The floor is yours, Aline. It's now time for the interactive session. Hello? Is Aline there? Okay, seems the microphone. Your microphone is not working well. Keep working on it. Let's go to Fred. Fred, unmute yourself. You read the first part of the question. You read May 1st. Fred Amuheire. Fred Amuheire. Fred Amuheire, are you there? Fred Amuheire, unmute yourself. Hello, Fred. Fred Amuheire. Fred.
Hello.
Yes, we can hear you now. 1st of May, begin. 1st of May, Mokasa's cash book.
1st of May 2018, Mokasa's cash book showed a cash balance of 2,024,000 and an overdraft of garnishing 336,000. During the weekend ended 6 May 2018, the following transactions took place. The 1st May sold garnishing 160,000 of goods to Pendo Dixon on credit.
So
then again,
no. Is answer ABC. Sold 160,000 of goods to Pendo Dixon on credit. So are we going to record in the sales day book? Are we going to record in the purchases day book? Are we going to record in the cash book?
On credit day book.
The sales day book.
Credit day book.
No, we have only 3 books. Fred. We have only 3 books. We have the sales day book, we have the purchases day book, and the cash book. We don't have a credit day book.
Okay, we shall.
So which one?
Sales day book.
Sales day book. Okay, answer is A. Thank you so much, Fred. The answer is A. Next, we slope down to, we go down to Esther Kutesa. Unmute yourself. You read May 1st, the 2nd May, this one. May 1st. Esther Kutesa.
May 1st. Yes, please. Can you hear me?
We can hear you.
May 1st. Withdrew Uganda shillings 50,000 of cash from the bank for business use. We are going to record it in the cash book.
Perfect. We are going to record in the cash book because the transaction is cash related, cash entirely. Draw 50,000 of cash from the bank for business use. Good. Thank you so much, Esther. Next, we go down to Faith Amolo. Faith, unmute. You read 2nd of May.
On 2nd of May, purchased goods from Kazinda Moses on credit for UGX 330,000, less 15% trade discount. Since the goods were purchased on credit, I would like to go with the purchases day book.
Purchases day book. Perfect. Thank you so much, Faith. So that is alternative B. That is alternative B. Purchase goods from Kazinda Moses on credit for 380,000. The figure that we are going to record, you will tell me when we reach that point. Thank you so much, Faith. Let's go down to Galaxy. Who is using Galaxy? You must put your name. You must put your name on your device so that I know. Galaxy, Note 8. There's someone behind that device. Please make sure you name when you're coming in. You give a name so that we know who we are working with. Okay, Galaxy, please unmute yourself. You read for us 2nd of May.
Hello.
Hello. What is your name, first of all? Galaxy.
Nakauchi Mwajib.
Oh, perfect. Read for us, repay the debt. That one.
We paid a debt of Uganda shillings 120,000 owing to Kisarita, taking advantage of 10% cash discount.
Okay.
The payment was by check. So I think we are going to...
Is the answer A, B, or C? We are going to record where? Cash book, sales day book, purchases day book.
Sales day book.
We are paying. They're even talking about a check. You know, a check is cash. Don't you think so? Cash book. Yes, it's supposed to be a cash book. You would record in the sales day book if it was a sale on credit. So we only record in the sales day book if it is a sale on credit. Thank you so much. Thank you so much. Finally, we go to Enid, Patience Enid, unmute, and you read for us this one, 3rd of May.
Okay, 3rd of May, sold 45,000 Ugandan shillings of goods for cash. I think it would be a cash book.
Cash book. Okay. Thank you so much. In it, this is going to be the cash book. Yes, we can see it is a sale, but the sale is on cash, because you can have a cash sale and you can also have a credit sale. So since we have sold on cash, our correct entry is going to be C. Good. All right. I now recycle again. I go back to Aline. Aline, what happened to you? Huh? Aline, this is an interactive lecture. You don't keep quiet. Don't expect to be quiet in this lecture. Aline. Okay, let me read it. You tell me in the chat. I can see you unmuting, but next time work on your microphone. So I'm going to read out for Aline. You tell me the answer in the chat. 4th of May, sold 80,000 of goods to Moses Kafumbe on credit, offering a 12.5% discount if payment is made within 7 days. So Aline, where do we record this transaction on 4th of May? Sold goods, 80,000 to Moses Kafumbe on credit. Payment is going to be made within 17 days. Where do we record this? Just type in the chat. That one is yours. Type in the chat, type in the chat, type in the chat. Anybody to help Aline? You can also type in the chat and tell us. Anyone to help Aline? Anyone there? Answer is A. Okay. So in it says answer is A. Okay. All right. Thank you so much. Correct. I think the answer is A, as per that submission there, because we have sold on credit. So that must be A. May 4th, paid the telephone bill. This one is for Fred. Fred paid the telephone bill of 210 by check. Where do we record the payment?
I think since he paid, meaning he bought, it must be recorded under purchase day book.
Must be recorded where?
Under purchase day book.
Pay the telephone bill. Pay the telephone bill. Paid.
Yes.
He paid.
Okay, then it is by cash.
Cash. So that's a cash book.
By cash.
Yeah,
Yes.
that's cash. Cash book. That is C. Good. 4th of May, purchased 400,000 of goods on credit from JMV. This one is for Esther Kutesa.
Purchased a telephone bill on 4th.
Credit.
Which one am I?
4th of May, purchased 400,000 of goods on credit, JMV.
I think it goes under the purchase day book.
Purchases day book. Okay, thank you so much. That is answer B. 5th of May, received a check from Muhumuza Alvin, 180. Alvin has taken advantage of 20,000 cash discount offered to him. Okay, this is for Faith Amolo. Received a check from Muhumuza.
It's a cash book.
Cash book. Okay, thank you so much. Then 5th of May, sold 304,000 goods credit. Sold 304 of goods to KCCA Galaxy Note 8. Where do we place this one? Galaxy Note 8. Galaxy. Next time put the name so that I read the name. Anybody to help Galaxy? Galaxy seems to be struggling there. Anybody? Anyone? Help Galaxy. Sold 304 of goods to KCCA.
I think it's A.
A. Okay, thank you so much. Thank you so much. That is A. That is the sales day book. Then we have 5th of May. Purchased 135,000 of goods from Ham Enterprises by check. This is for Enid Patience. Patience Enid. Ham Enterprises, 5th of May. Okay, Aline has helped you. Yes, please. Enid.
5th of Yes, please. That is
5th
a
of May.
cash book.
Cash book. Okay. Because you are just using a check, eh?
Yes.
Good. Thank you so much. Then we have 6th of May, received a check from Watoto. Enid, this is also yours for performing well. 6th of May, received a check from Watoto Church, 482.
Received a check from. That is a cash
book. Okay. Then finally, we have 6th of May, purchased 100,000 of goods on credit from Sanyu and Sons. Anybody? This is now for all of you. Purchased 100,000 of goods on credit from Sanyu and Sons.
Yeah.
That
Purchases.
is purchases the book.
Purchases the book, yeah. B.
Which is B. Okay, perfect. Which is B. Thank you so much. Okay, now what we are going to do, we are going to prepare statement by statement. Let us begin with the sales day book. Let us begin with the sales day book. How will the sales day book look? So we are going to prepare, take a picture and share in the WhatsApp group. Okay? Prepare, everybody, get to work now. I want you to prepare your own sales day book, take a picture and share in our WhatsApp group. This is the format of the sales day book. So we are all getting to work. Get your books, prepare, your sales day book, take a screenshot, take a picture, post it in the WhatsApp group. I'm waiting. I'm giving you 5 minutes. Time is up. Time is up. Time is up. I need to see what you've done. Take a picture, share in the WhatsApp group. I have received from Faith. I'm waiting for Kutesa. I'm waiting for Aline. I'm waiting for Fred. I'm waiting for Mwajib. Patience in it. I'm waiting for you. Please take a picture, share in the WhatsApp group. Take a picture, share with me. Take a picture, take a picture. I'm waiting. Picture. Sales the book. From what we have done, this is the piece of information that we have here. So I expect in your sales day book to have transaction on the first, the one for Pendo, as I've seen here, what Faith has done. I expect the transaction on the 4th of May, the transaction with Moses Kafumbe. I expect the third one, which is the transaction on the 5th of May with KCCA. Okay. Thank you so much, Enid. Enid has submitted here. Enid has submitted. Good. So we have a total of 544. Thank you so much, Enid. Kutesa has also submitted. There is no total, but I think it comes to 544. Thank you so much, Kutesa. Mwajib, where are you? Fred, Aline, where are you guys? come on board, come through. You know, I cannot move until when you all submit. I want to be sure that everybody has actually submitted, has understood. If you have failed, take a picture of an empty, you know, at least you should be able to draw the title, you put the name of the company, just draw a sketch and send me. Aline has sent me. Okay, thank you so much. Okay. I hope you get a better book, Aline. You need to get a better book there. You get something better. Let's go to who? Majib? Fred? Fred, you don't have a book? Okay. I think we can go with the 544. Thank you so much. Let us go to the Purchases Day book. Another 5 minutes. Prepare your Purchases Day book. Take a picture, share in the WhatsApp group. This is what we use our WhatsApp group for: submitting coursework, submitting assignments, submitting what you have. So we shall be using it, and also to discuss what could be not understood. It's basically a forum, a vibrant forum, not a quiet forum, vibrant, discussing issues of financial accounting. Okay, Purchases Day book, another 5 minutes. Fred, Majib, I'm waiting for your work. Please, I'm waiting for your work. I'm waiting for your work. Okay, 5 minutes. We must be having something like this. For the Purchases Day book, I think where you're getting challenges is on the transaction with Kazinda. That transaction is less the discount. So you must less the discount. If you're finding challenges there, you must less the discount. You must less the discount. So you will find the recorded version of this lecture on your student account, though still I'll share with you. Thank you so much for those who have submitted. Thank you so much. Those who have managed to submit, you can make the corrections respectively. Those who didn't get the right figures. So we shall continue our discussion next Monday, not on Wednesday. I still want to finish up with the guys of May. So we shall meet again on Monday to continue our discussion on the accounting cycle. We shall be talking about the cash book on Monday. Okay, next Monday, we shall be talking about the cash book. I think after that week, after this week, we should be able to meet twice in a week, or even 3 times a week, because we need to finish as fast as we can. So don't wait for time to go or what, because you know August is a very, very short period and we have a lot to cover. So I want you to move as fast as you can, especially with the resources, the videos, the notes, the slides that we have shared on your student account. So I don't know whether you have any questions. It's time for Q&A. I will start with Aline. If you have any question, Fred, Esther, Faith, Majib, Patience, any questions? Any questions? If there is no question, just type in the chat, no question, so that I close and sign out. If there are no questions, just notify me in the chat. Okay, thank you so much. Let me wish you all the best. We meet next week on Monday.